everyone, and welcome to the 14th episode of Not Just Numbers, Honest Conversations with a Financial Advisor and Lawyer. I'm Madison Demora, and I'm here with Mike Gary. Mike is the financial advisor and CFP and the founder and the CEO of Yardley Wealth Management. He is also an estate planning lawyer, and his law firm is Yardley Estate Planning. Hey, Mike.
Hey, Maddie. How are you?
I'm good. How are you?
Good. It's a beautiful fall day today. The last couple of times we recorded, it was pretty crappy outside.
Yeah. So, Mike, what would you like to discuss today?
I think we have that article about maybe the having more information isn't actually a plus for people.
Yep. All right. So it's titled Ignorance Really is Bliss When It Comes to Investing, and that's by Spencer Jacob. I'm going to read the summary and I'll ask you some questions and we'll go from there.
That sounds great.
All righty. So here's the summary.
The article discusses the idea that having more information in investing is not always beneficial and can even be detrimental. It begins by highlighting the excessive amount of data available to traders and investors today, from multiple screens to access to numerous analyst forecasts and opinions. Retail investors now have access to a wealth of information, narrowing the information gap with professionals. The article presents an experiment from 1973 where handicappers were asked to predict the outcomes of horse races. As they were provided with more information, their confidence increased, but their accuracy remained the same. This illustrates that having more knowledge doesn't necessarily lead to better results. The article then mentions instances where detailed knowledge led to risky investment decisions, such as analysts at Goldman Sachs being overly confident about Enron's prospect before its bankruptcy. It also highlights the issue of confirmation bias when investors seek out information that supports their existing beliefs. The proliferation of information through social media and smartphone apps is discussed as well, with the downside being that constantly checking accounts can lead to myopic loss aversion, where investors are more likely to see losses and react by trading more frequently, which can be detrimental to returns. In conclusion, the article suggests that in investing, it's better to focus on few key factors in a systematic way rather than drowning in excessive information. It also warns against following the crowd and emphasizes the importance of timing and not getting caught up in the market craziness.
So, how does the article question the value of having more knowledge in investing?
I think the article really questions the value. I mean, it's great. It's a very interesting article, and I'd say it tends to be true in my experience. So people are always looking for some edge to beat the market or to pick some stock. And I can't tell you how many times in the last 25 years somebody's come up to me and said, "Hey, I know this about such and such stock." And the thing is, well, typically millions or tens of millions of people also know that. So it doesn't provide any kind of advantage. And the other thing is often, that little piece of news or little nugget is lost up in a much other broader news about the company. And it might not be enough for the company to go up like the way that the person thinks. So it is interesting that more information has not led to better results. It's really counterintuitive, but I find it to be true.
Yeah. So, what is the experiment involving the handicappers and horse race predictions, and what does it reveal about knowledge and confidence?
So they did an experiment with professional handicappers and horse races, and they gave them some amount of information, and the handicappers did pretty well. Like they did like 17% effective in their picks, and they had and they asked them how confident they were, and like their confidence level was like 19%. So they were really pretty much spot on. And so then they gave them much more information about the races, which led to the handicappers being much more confident about their picks, but their pick percentage rate was exactly the same. So having more information with handicapping horse race didn't help them at all.
But how does the article highlight the influence of social media and online communities on investing decisions? What psychological bias does it mention?
Sure. So it mentions confirmation bias. So one of the dangers, right, in crowdsourcing your investments, following somebody on Reddit or when people are talking about GameStop, is that in social media, you tend to see stuff that you want to see, and it will confirm that whatever bias you have. You're not likely to see negative information presented, and that could be bad, right? Like if you want to know the pros and cons of whatever you're thinking about investing, if all you see are cons, if all you see are pros, that will lead you to be overly confident and maybe make a riskier bet or gamble than you otherwise might have.
Okay. What is myopic loss aversion and how does it affect investors?
Yeah, so myopic loss aversion is when somebody is too focused on losses and doesn't want to have them. So if they're looking at your statement, well, when people look at their statements, they're more likely to notice what has gone down for them. And if they look at them too much, they'll want to do something about that, and it causes people to trade more often. And there's lots of studies that show that people who trade more have worse relative performance than people who don't trade more. So trading is not necessarily a good thing. Again, there's a lot of counterintuitive stuff in investing, Maddie.
Yes, absolutely. What is the main message or takeaway from this article?
The main takeaway is that more information is not necessarily beneficial, and there's a couple of reasons why. First, it makes people do if people have more information, or especially if they think they have inside information, it opens them up to taking riskier bets, right? And so instead of looking at their overall portfolio and the diversification they need, they are more likely to take bets and do something like outside of whatever their financial plan is. And it's interesting, one issue is that investment information relating to stocks or funds is overwhelmingly positive, right? So it talked about the confirmation bias in those in the online forums, right? So people on Reddit, if they're talking about GameStop, they're going to really highlight all the positives, or they did a couple of years ago really highlight the positives. The other thing is that Wall Street does the same thing. That the number of sell or don't buy recommendations from Wall Street analysts is really low, right? It is not easy to find like a thorough analysis of the pros and cons of a company. When I worked at Merrill, going back 20, 25 years, remember, they would have a rating where it was like strong buy, neutral, hold, sell. They almost never had sell positions. The only time they would have sell is when the company was basically bankrupt and there was no way for the Merrill to get new investment banking business with that company, right? So the way it was 20, 25 years ago is the investment banks like Merrill Lynch or Smith Barney, they would cover all the different companies like GE or J&J, and then they would say, oh, this analyst spends all this time poring over data and says, oh, we should buy this company. But what people didn't know at the time was that they were so overwhelmingly positive. And the reason that they were is that the reason that the analysts would cover them and highlight stuff is they would want the company to know how well they knew the company, so that when the company was going to do like a merger and acquisition or some other investment banking thing that was really lucrative, they would say, oh, well, this analyst at Bank of America really knows our company. So when we do this spin-off, or if we make this acquisition, we want to have those men and women on our team for that. And so it was like they were cheering for them, hoping to be picked by them and then make huge fees, because investment banking is really really profitable for those institutions. And they would always want more of it.
Okay. Is there anything else you wanted to add about the article?
The other thing that it reminded me of is, again, going back to Merrill, a woman I worked next to, awesome person, awesome woman. Her husband at the time worked for one of the banks, and he was like an analyst and a fund manager. And he worked in technology, and this was like late 90s, early 2006. Technology was huge. This is .com bubble, and this guy was a brilliant guy who worked all the time, and he worked with other analysts who worked all the time. And, they tried to buy and sell stocks for like a growth fund. And, they all had all kinds of experience and education, and it's a lot of smart people working together. And they did okay, but not great. And then, I'd have some stranger call me and say, hey, I heard about this stock and I know this news about it. I think we should buy it. And the idea of like, there's, something called asymmetrical information. Those Morgan Stanley men and women knew, I don't know, a million times as much as like the random stranger on the phone. But the random stranger on the phone was probably more confident in making their investment selection, than the Morgan Stanley people were. And it just always seemed funny to me. But I think it really is part of the whole idea that people think they have more information will lead to better outcomes. And this is an area where that's not necessarily true. Back in the day, even before my time, I think that people looked at as advisors or brokers, as many more were brokers at that time, as like gatekeepers of information. And so they had information, and that's why you would go to an advisor, because they had that information, and that's the way to be successful. The reality is the information now is readily available. All kinds of information is out there. And what the advisor's real job is to make sense of that information and provide a little bit more like wisdom and historical perspective. It's not knowing whether J&J is going to beat their earnings by a penny or not. It's knowing like how much stocks should be in your portfolio at this stage of your life with the goals that you have. Does that make sense to you?
Yeah, absolutely. Yeah.
All right. And I talked about the old dimes too many times in this conversation. We'll do that less in the future.
What advice would you give people who have this problem of, like they keep checking and they get nervous and it makes them feel some type of way?
Oh, like, so if people like check their statements too often and look for, I would say that, you should check monthly or quarterly to make sure that the balance is roughly what you think it is, that nothing has come out of your account that you don't know about, so that nobody has stolen your information. And, if you have a diversified portfolio and, you've discussed it with your advisor, I would say try not to stress too much on what the individual holdings are doing at any specific time. Think about how everything relates to your overall plan. And if you don't have a plan, you should get one. It's really important. And I think that helps. I think when people realize that they have a plan and it's been discussed and vetted, and you talk it over and update it when necessary, it's a lot easier to handle if some stock or some fund is down at some point, because you when you're planning that things are going to go down. It's normal. Things don't go up all the time.
Mm-hmm.
I think the odds of the S&P 500 going down on any given day are like 45 or 48%, right? So there are almost as many down days as there are up days. But once you get to like a 10-year period, then the S&P 500 is only down a couple percent of the time in any given 10-year period.
Yeah.
So big picture. Think big picture, Madison.
Okay. All right. Well, I hope this helped some of our listeners to relieve some of that investing stress. We are joined here today with Scott Burney. Scott is the managing partner of the Vault Company here in Yardley. Scott, would you like to explain to our listeners what you do for a living, a little background about yourself?
Yeah, so what I'm doing now is I'm running Vault Brewing, and Vault Brewing has its original restaurant and brewery on 10 South Main Street in Yardley. That opened in October of 2012. So going on
Wow.
11, this is our 11th year. And then in addition to that, we kind of outgrew our space there as far as brewing goes. And we have a location up on College Avenue, just 2 blocks basically away, that houses our production facility, our main production facility for our brewery. And that's a 7,000 square foot area, warehouse type space. And then we also have a few other restaurants since then. The first was Pretty Bird Coffee Roasters, and that's at 7 South Main, so just across the street from the original location. That opened, it's going on almost 8 years now. So that has been around a staple in Yardley on Main Street as well for quite a few years. And in that space at night, we also opened another restaurant 6 years ago called Kawaii Tori Sushi. And that outgrew that space and is now at 25 South Main Street. So that's restaurant number 3. And then we also have Vault Smokehouse, which is at our production facility. It's a tap room. It's got some TVs for watching sports. It's barbecue. And that's been around about 2 years. And then in Pretty Bird space at night, we have Pretty Burger, which is a smash burger concept. That's been around about a year, and that's been doing really well as well. So that's
Maddie, did you catch those addresses? We are surrounded by vault companies. Surrounded, all 4 sides. So Scott, is that did you always want to go into this, or did you come from a different background?
No, so my background is I was in finance, asset management, investment management. So not on the personal finance side like you are. I dealt with institutions. I was with Morgan Stanley Asset Management for years, and then broke off on my own and was in hedge funds after that, and had 2 of my own. I had retired in 2012 from that business and owned a few properties in town, which got me to know some of the vault owners at that time. I invested years ago, and about a year and a half ago, the then managing partner, Jim Kane, asked that I step in and run vault businesses as well, and take over. And he's back in the pharma industry, which is he was an executive of prior to this. So it was my turn.
Okay. So what's the day-to-day like?
Day to day is the brewery operation starts at an early hour, which is more my speed. Day to day, we've got like I said, 5 different restaurants. Dealing with the managers, dealing with payroll, dealing with employee issues, because we have close to 100 employees across all the businesses. The age is probably about half of mine on average. So that is an interesting change relative to what I had before. It's troubleshooting most of the time. Okay. The strategy part of it is it's a local business. It's really about making sure people have good customer experiences. Everything's running smoothly, so that the front of house, so customer facing people, the back of house, the cooks, the dishwashers, the line cooks, the prep cooks are all have everything they need to make the experience good. And then on the brewery side, it's making sure shipments come in. 10 pallets of grain. Is it here when we are brewing for that brew? Are the hops here? Is the yeast ready? So a lot of logistics. Now the brewery itself runs. They are very good at that. So I don't have to do a lot of that. But on the restaurant side, there's a lot more moving parts.
Sure.
So
Sure. And it sounds like your employees have ages similar to like your daughters more than your age. And so, yeah, it would be interesting.
on average, that's exactly it. So, that comes with, me having to adjust my, the way I ask for things.
Sure.
Just communication with younger people is a different animal. I have to text a lot more, which I despise. I'd rather email, but it's just the way it is. So,
Sure. Right.
Okay.
It's hard enough to run any kind of business, but you have 5 locations that are open to the public almost every day of the year. That's a lot of interactions with the local community.
It is. It's constant. Yeah, 3 years ago, I could go into Vault and, I was the fun partner. I'd sit at the bar, I'd say hi to the bartender. They may or may not know who I am. And now, the bartender will come in at 10:30 to open for 11:30, get ready. And, I'll be, fixing a table, laying on the floor,
Right.
depending on what's going on. And then, everyone in the establishments, you get to know all your you get to know an awful lot of your patrons.
Right.
So.
Right. And you already knew a lot of people around here. So you must know a lot of people around here now.
I am trying to keep up.
So that might lead me into my next question. How long have you been in the Yardley area?
My wife and I moved in 95. So, it's a long time at this point, closing in on 30 years. We've been, that was in Lower Makefield, a little over 2 years ago, we moved right into Yardley Borough. We rehabbed a building, you might know it. And then, we're right in the borough.
So how's business going? I guess just in an all.
Yeah, so the businesses are, the businesses are doing well. I will tell you the economy in general seems to be dampening some discretionary spending. The craft brewing side of it, the distribution side. So when you see our cans or our kegs at a different bar, over the country, that's down probably 20% in the last 2 years. It's, there's 3 times as many craft brewers across the country as there were 5 years ago. So that,
right.
that kind of dampens that. We're doing pretty well. We're, relative to that, we're better, but it doesn't mean we're not down. On the restaurants, it is oddly weather dependent, and very, we track everything daily, weekly, monthly, year over year, over the past few years. And that is doing fine. It's flat. Some of them are up, some of them are a little bit, down, and it kind of evens out. So Yardley has a good customer base, and it's really about pulling people in from outside of Yardley that changes your sales numbers up or down at all. But the Yardley base is pretty consistent. So we can look at the demographics of our, where all the credit card receipts come from. With 2 or 3 of our businesses, it's within 5 miles. Is 80% of it Vault? The main is probably 50% within 5 miles, and then 25 within 10, again from 5 to 10, and then 25 from 10 to 20. So that's got a bigger pull.
All right. I get that. I guess if it's you have terrible weather out there, are you going to drive 12 miles to go to the Vault? It's probably a little bit less likely than if it was beautiful weather and you thought you had a chance of sitting outside or walking around Main Street before or after. Scott, as someone who's had a beer or two, thinking about like the changes in like the number of breweries in, and then the other like cocktails you could get in cans now,
Mhm.
all over the place compared to 10 years ago, or even 5 years ago. It's amazing. Like on the one hand, you have so much better choice, but I can't imagine that marketplace. Like it's just there's so many.
Yeah, and for a while, I think everyone in the brewery side. So seltzers you can make them as malt based, so they're brewery products.
Okay.
So we've tried that. We've done a few. We do some iced teas, some hard iced teas, but it's really just for our own establishments.
Okay.
There's too many people out there, and it's really about, especially with our beer, it's we have to really focus on what we do well, and
Mhm.
the rest of it would just distract us and cause the brewers a little
Yes, I can't
help.
imagine that angst from the brewers if it's like a different flavor every week of a seltzer, or as fickle as the market can be for that. Like it's funny to see even in my own garage fridge. Like friends get into something, I'll buy some, there's some left over, and nobody wants to have it again.
Right, and that's exactly it. And the brewers are, brewers, chefs. Um, there's some artistry to it, and you can only meddle so much as a manager. And frankly, they won't do the other things as well as they do what they're trained
Sure.
to do. So it's not in our benefit to push them too far. Um, uh, and there's too many other people that are doing it well on the other
Right.
side. So
Right. Like you said, I think it makes a lot of sense to have like one or two in your establishment, so somebody could try it, or somebody's not like a real beer lover comes in. It's like,
Mhm.
oh, okay, well, I'll have this instead.
Right.
But yeah, it's a crazy fickle market, and it's so saturated.
Yeah. And Pennsylvania, the brewing laws, the craft brewing laws, the distilling regulations are actually pretty relative to other states. It's designed and set up in a pretty good fashion. So we're allowed to have non-beer products and sell them as long as they're produced in Pennsylvania. So you'll come into our establishments involved in smokehouse anyway, um, and Kawaitori, and you can get wine, and it's either PA. I think wine actually has an exception for New Jersey. Don't know
Okay.
why, but so you can get wine. We can do mixed drinks as long as it's distilled within Pennsylvania. So there's a ratio we need to keep, that it needs to be mostly our product, our brewery products. But so you can come in and get a margarita or gin tonic or something
Right.
else. So that has gotten much better over the years, as now you can find the product to put in.
Right. Right.
So,
How did the pandemic affect your business?
well, thankfully, Jim Kane was running the business then. But being in town, I was heavily involved in, being an extra help, set of hands. Um, it, the restaurants were, basically completely shifted to takeout. Sushi lends itself well to that. Some of our other products don't. Coffee was pretty good. Beer, one of the reasons craft brewing is down is because craft brewing had a artificial spike. You know, if you're not going out and you go out and you buy beer in a can, as a 45-year-old, are you getting Bud Light? Or are you getting something, something a little better? Generally, they shifted towards better. And so the craft brewers did very well as far as, being able to sell through. It's leveled off since then. So that's the amount of changes that had to happen for our restaurants and our brewery within that short time period. It was, it really is a testament to everybody here, because you had to change. Sometimes within 3 or 4 days, we put a new system in place, beer delivery throughout the state. We can do that. Set up, change the website, connected to a distributor that would pick it up and deliver it for us. That was, they had to be bonded and registered to the state. And, that was done in 3 days. I have no idea how he did it. So
that just shows when you got to do something, you figure out a way to do it.
You do, but not everybody did.
Yeah.
There was a fair amount. There were a fair amount of many restaurants that went under. Many breweries that really had to retreat or go under. And we did the opposite. So we expanded capacity. We're brewing more than we've ever brewed. And that was all a testament to how quickly we could move things around with the people we had. But again, I'm glad that wasn't me.
Yeah.
I was just helping.
Yeah. What do you like best about what you're doing?
It is busy, and it's definitely something new every day. Honestly, I can't stand when people, I wish the good people would stay with us, but I do like the interview process with new people. And it's a little tedious because it's very hard to get good people, but when you see them and you talk to them, it's interesting to see their life stories at 20 to 30.
Yeah.
And when you, like I said, when you run into one that's super hardworking, wants to improve themselves, you basically get excited for them. So that's the part that I like the most. And dealing with the customers at the restaurants is fun. Everybody has an opinion. And most of the time, comments are things we either know of already and we're trying to improve, or they're the opposite. They're kind of, oh, go this direction. I was like, no, we're intentionally not.
Right.
You have to play to your customer to some degree.
Sure.
And try and expand it a little without moving away from your existing client base.
Right. It's hard sometimes, but you have to let your clients and customers know like the context and like sometimes like the reasons why you do something that you do. Right. It might not be apparent on its face that you handle something the way that you do, but at least let's do with it's a little bit different in our business because when we talk with clients, it might be for an hour. And so we could say like, well, these are the reasons why we don't, I don't know, day trade, or the reasons why we don't short or something like that, and talk about, like their goals and their situation. And it's easier then, but I could just see you happen to go pick something up at the vault and somebody come and say, you should really, I don't know, do this. And you'd be like, well, we used to do that and we stopped because it didn't work,
Right.
But you can't, like, you have to be nice and say, oh, thanks for your suggestion or whatever.
Yeah. There's a lot of that. And as my kids say, I'm not particular, that hasn't been a great skill of mine either, to hide my, I don't think so face, but it's almost everybody. It's from a good place that they're saying it, so you don't mind. You just have to try and direct them back to, well, what do you like about our place now? And do you think that everybody would like that if we changed it?
Right.
So it's fun and, challenging personally for me because,
So one thing you said, Scott, that I really agree with is, you go with the assumption that people are giving you a suggestion from a good place, right? Like they want to make your life better or your business better. And I think that's true almost all the time. There's that 1% of people that are just cranky and just want to complain. But yeah, if you go under the assumption that people are trying to help, It makes it easier to take suggestions and think about it thoughtfully and try to give like the response that's right in that situation,
Yeah.
right? Because like if there's 1,000 people lined up at the bar at St. Patrick's Day, it might not be easy to say like, oh, the reason we didn't invest in that property over there, it might not be the easiest conversation. But yeah, no, I like that a lot, Scott.
Yeah, I mean, it really is. Especially when you're face to face.
Right.
Social media,
That's
there's
harder.
it's harder. Thank God we have a very good Allison. She's very good at responding, checking things out, doing some background if there was a legitimate issue, and finding out what the issue was. But yeah, social media is harder because you're to some degree anonymous, and there's no direct consequence.
Yeah.
The rate of cranks is higher than 1% on social media. It's not the same as you're standing talking to someone.
No, no. And it's hard to manage because it's still important. You still have to pay attention to it.
Yep.
It can still help or damage the business. And like I said, thankfully we have somebody that's very good at that.
Scott, 2 years ago, I don't know if I ever told you this, but 2 years ago, a troll on Google gave us 1 star and said all kinds of harsh words about us. We had never had any contact with that person. The posting at time, they posted it like from Ukraine. And there's nothing that we could do. Like our web person, Candace, who's amazing, gave me the response and she contacted Google, but of course they wouldn't take it down. And, nobody looks at the reply. And, in our business, it was not legal for us to have endorsements or testimonials until about a year ago. And so we could do nothing, but if you Googled us, it would show 1 star on Google. And during that 9 months or so, until we were able to address it, I looked at the number of people who reached out to us and became clients. And it was about the lowest rate since we started in 2006. And so, we did get clients, but they were all from referrals where, oh, it's so-and-so's mom. Well, they're not going to Google because their daughter said, right, hey, you should do this. It really hurt. And then they changed early last year to allow us, or early this year, I'm not sure now, probably earlier this year. And so now every once in a while, if we have an interaction with somebody and say, hey, if you think we deserve it, please, rate us and give us 5 stars on Google. And it's helped tremendously because like 28 or 30 people have done that right, for us. And so now it looks good. But yeah, for I think it was 9 months or a year, it really hurt us. And we had nothing to do with it. Like we don't know the person. And if that had happened 15 years ago, I would be back working as a lawyer full time. Think how bad that outcome would be.
Well, I mean, we do get an awful lot of reviews every week, and some of them, like you can tell, honestly, we can pick them out now. Oh, that's some some SEO that's trying to build
right,
up somebody else and knock you down. Which it's funny, we have some partners in Australia, and they were one of our vendors is out there, and we were talking to him, and it's that's illegal to do in other parts of the world. Like you can't,
yeah, it should be.
Yeah. But it's not here, and there's no consequence, so you can't really. You can do your best to address it. I do look at the comments, the reply. That's maybe a new thing since I've been in this role or been an investor here. But yeah, it's very difficult to counter that. Other than just restaurants, we can have 1,000 reviews, so it'll average itself out. So it'll be 4 or 7.
Right.
And that's about as good as you're going to get because you got when you have 1,000 people come in and in a week or two and sit down, one of them is going to have a bad experience for whatever reason.
Sure. They could be
is,
having a bad day before they walk in the door and something just doesn't sit right with them, and it
yep,
snowballs into a bad experience. I think most people who are looking, if they're looking for a review, decide whether to go in. If they see a 4.7 with 1,000 reviews, I think they're
right,
going to realize that's pretty good.
right. And that's exactly what we're trying to go for, is that just almost all of our customers have a good experience, a 4 or 5.
Yeah.
I don't know. And it's funny, the difference, I never really thought about the difference between a 4 and a 5 before, because I
Right.
thought 4 was good, you know?
Yeah.
Yeah. When you only have 5 options, a 4 is maybe,
Pretty good.
not 100, but it could be anywhere between an 80 and a 95. It's
Right.
not. It needs to be, yeah, it needs to be a 5.
Yep. Those
It could be a
extra,
10-point scale.
it might be better.
Yeah.
It might be better.
Yeah.
With all the success you have achieved, what is the biggest challenge you're facing or you have faced?
Facing here, it's it's the same as everybody else. Time management, trying to make sure you balance everything. My time management for a few years when I was retired was not as intense as it is now. I've got to I've got a whole pile of things to do, and so I kind of fall back on my old school. I always have a list. I cross it off. The next morning, I flip the page. I take the stuff that I didn't do and move it to the next page. It's old school, and then my calendar looks like Swiss cheese, and it hadn't for 10 years ish. So, and trying to get away from the businesses and promote people that can manage it while I'm out. So that's the really hard part, is that if something goes wrong, you're still the owner. You're still running everything. So it needs to be, it's a hard balance.
Sure.
I'm trying to get people, you try and promote people to, ask forgiveness, not permission, for a lot of things. And every once in a while, it doesn't quite work out. And that's not a second guessing kind of thing. That's a, hey, we've done these things close to that, but I think we've crossed the line on the decision, instead of pulling them back. So those kind of things are pretty difficult. And given the age group that I'm dealing with, you need to make sure you don't quelch, pull them back too far. Like they are moving in the direction you want them to, starting to make decisions. So you have to encourage that side without, you have to encourage the good part of it.
Yeah, so it's very different, right? Because people have been nice to them growing up. It's not like when we were that age and boomers treated us like crap. They rightly don't get treated like that. It's good for them.
It is.
So you have to figure things out a little bit better.
If you could go back to your 18-year-old self with one piece of advice, what would it be?
Well, like Mike said, I have 25-year-old, 21-year-old. I would have taken the summer off after graduating and done something fun, as opposed to starting work 5 days after I graduated.
Wow.
I would have taken that summer, but not more.
Just the right amount of time. I gotcha.
Yeah.
All right. So we know your time is incredibly valuable, and we greatly appreciate you spending time with us. For those watching and listening and want to learn more about the Vault and all the other businesses, where is the best place they could find you guys?
I would either go to social media, or really Instagram, Facebook, or just stop in at 10 South Main Street, and you can see the other businesses from there.
Okay.
And our business from there. You can see our business from there.
Yes. Yep. just
Scott, thanks so much.
Street.
Yeah,
Okay.
This has been great.
Thank you.
Thank you,
Okay.
Scott. Thank you so much.
Yep.
For more information on Yardley Wealth Management or Yardley Estate Planning, you could visit our website at yardleywealth.net. and yardleyestate.net. You can also follow us on socials at Yardley Wealth Management. This podcast has been produced by Madison Demora and Mike Gary with the technical and artistic help from Poe Productions.